with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Coming up, we will have half an hour of business news and analysis. On today's show, top-tier Chinese cities Beijing, Shanghai, Guangzhou, and Shenzhen have all released measures to boost local property markets. What are their implications? And we will also discuss the future of European competitiveness. And now let's begin with our top story. Top-tier Chinese cities have released a slew of measures to boost the local property markets. The southern city of Guangzhou has lifted all restrictions on home purchase, including the number of properties that individuals can own in the city. Shanghai and Shenzhen have eased eligibility restrictions on second home purchase by non-local residents, while lowering the minimum down payment ratio for first-time home buyers to 15%. And Beijing has lowered mortgage rates for both the first and second home purchase. It also loosened the threshold for non-resident buyers requiring fewer years of tax payments or social security contributions. And meanwhile, China's 6 major national commercial banks have announced plans to adjust mortgage rates for existing home loans in line with the central bank policies. So why are all these moves now? Can they stimulate China's property market? And what do they mean for individual home buyers? For more on this, joined us on the line now are Chen Jiahe, Chief Investment Officer at Novum Archi Technologies, and also Yan Liang, Professor of Economics, Willamette University. So I will start with you. China's top-tier cities, Beijing, Guangzhou, they are all lifting some restrictions on home buyings. So why are they making these moves now?
Right. I think this move is part of a bigger picture, right? The bigger stimulus efforts or the bigger sort of structural reform efforts that we have seen. That basically, in the recent days, the Chinese government has implemented and announced a slew of policies, including monetary policy, and also some specific policies to support the housing market as well as the equity market. So I think the support of the housing market is the idea that we want to stabilize the housing market. I think these moves are launched in a very timely fashion. For one, is we know that the real estate market has been under the recorrections and adjustments has been 2-3 years now. When you look at the August number, for example, the housing price continued to fall, and it has fallen by 5.3% year on year. The real estate sector investment continued to, in negative zone. Now, I think the negative investment in real estate sector has been partly offset by the investments in the high-tech manufacturing, etc. So that side of the demand drag is not as severe. But at the same time, because housing is such important wealth for families, for households, and so this continuous downward trend in the housing market drag down the internal consumption demand. And I think also, in a way, it's important to stabilize the housing market. So we need to understand the policy intention is not to undo any of the recorrections and adjustments that have been done in the past. But really now, I think it's the point to stabilize the housing market, to reduce the collateral damage, so to speak, as we transition away, from the real estate investment-driven growth to different types of a high-quality growth model. But in the same time, we need to mitigate the negative impacts from the housing market, being the housing, the wealth has been reduced and the prices have been going down, and there has been, lack of investment and also purchases. So I think it is time to take more forceful measures to stabilize the housing market. There has been already a slew of policies. And so now we're just seeing even more from the demand side to help to stabilize the housing market.
And could you tell us more about the details of those different cities' easing policies?
Right. So as you just mentioned, Guangzhou basically has removed all restrictions on housing purchases, meaning that non-residents or people don't have Guangzhou hukou are also allowed to buy houses. Single individuals, they can buy houses, and there's also no limitations on how many houses these individuals can purchase. So this is a tier one city with very unprecedented, I would say, relaxation of the housing market restrictions. And for Shanghai and Shenzhen, they still have certain restrictions or requirements, even though those are also very much relaxed. So overall, I think, people are welcoming this kind of policies. It has been reported in Shanghai, for example, they recorded 872 transactions of the lifting homes, which is nearly 80% higher than the average daily numbers in September for Shanghai. So it's clear that these restrictions have really the relaxation of this housing purchase restrictions have incentivized people to purchase houses. That said, we are having a long holiday right now, but it's likely, I think, when people return from their holidays, we're likely to see more interest in the housing market.
So Jiahe, so what does all this mean for the property market and also for the individual home buyers?
Well, currently, all these policies are actually reducing the financial burden for people to buy their homes in many cities, especially for the second home buyer, because you've got a lower down payment for the moment, and the interest rate that they have to pay will also be reduced. So for people who are looking for a second home buying, the recent policy are really helping them. And for the people who have already bought the houses in the past, you can see that their consumption power has been increased basically because the interest rate for the remaining mortgage has also been reduced. So that means a lot of purchasing power will be released for people who are still holding a mortgage that lasts for decades. So it looks like these are putting a lot of energy into the property market, which has been falling for the past few years. For the individual investors, currently, if you really think that you want to buy a house, then you can find that you can afford it with much lower financial investment compared with past. For example, a typical home in large cities in China, like, not talking about the first tier cities like Shanghai or Beijing, but when we look at the large cities like Changsha, Wuhan, or Nanjing, would cost you somewhere around about 2 million RMB. And when we talk about the down payment at a very high percentage, which was prevailing back 5 years ago, that if you want the down payment ratio at that time was about 50 or 40%, especially for the second home buyers. That sometimes it even goes to 70%. So let's say 50%. It means that if you cost 2 million to buy a house, you have to accumulate at least 1 million yuan in cash to buy your second home, which is very difficult for many Chinese people. It's a lot of money. I mean, it's even probably very difficult in anywhere of the world that you have to get like 150,000 US dollar to in cash to buy your second home. But now the down payment for the second home buyers has been reduced to as low as 15%. So that means you only need about 300,000 yuan to buy your second home. So that's much that's about 1/3 of the money that you need when these policies were not coming out. So for people who are looking for a home, and especially the second home, the recent policies are really helping them.
And Jiahe, the easing measures took effect just before the National Day holiday. So does it lead to more house viewings and transactions during the holiday? What's your observation?
Definitely. I mean, you see a lot of people coming out during this long holiday, and that's the reason why they picked this timing. I mean, the end of September to unleash all these policies. Because if you unleash all these policies in a regular period that is not followed by a long holiday, then people will not have enough time to discuss with each other and spread their words about the coming out of these new policies, because they have to go to work, 9 o'clock in the office, 5 o'clock out in the office, and they don't have time to social, to talk to each other, to have dinners together. The words will not be spread as much as this time, because you put all these policies in front of this 7-day long holiday, and people will have a long holiday to talk to each other, to consult with each other, and to make their decisions, and to even accumulate the cash that they will need. And when they want to look for a second home or maybe their first home, then they have time to look around for property agencies, all these kind of things. And there's another thing is that because these policies has also been stimulating the stock market, so the stock has been rising quite significantly before the national holiday. It's been rising about 20% in just the 5 trading days. And a lot of people are suddenly having a lot of money. And we are also expecting that the market will continue in the next few trading days after the national holiday. So people start to feel that they're rich. When your wealth invested in stock market has suddenly rose by 20%, and you are even positive about it would be rising even more after the national holiday. So people have all these budgets and they're rushing out to look at the properties. So yes, because of the timing of these policies, because of the 7-day long holiday, and because of the recent very positive performance of the stock market, we can see that more people are going out to look at the properties during this holiday. Actually, if you talk to the local housing agencies and even the securities companies' local branches, most of them have canceled their holidays during this 7-day holiday, which is, they have to accept all these customers so they come back to work.
So, Jiahe, you earlier mentioned the potential of consumption, and we are also seeing the consumption rebound during the National Day holiday. So tell us more about the tourism and consumption. What's the trend, and what do you think the consumption will play in China's economic recovery for the rest of the year?
Well, when we look at China's economic growth in this year and perhaps in the next 5 to 10 years, we can see that consumption is one of the most important factors, if not the most important factor, because if you look at China's economic structure right now, the consumption is taking a relatively smaller percentage compared with peer countries, South Korea, Japan, United States, France, Australia, you name it. If you compare the percentage of China's GDP that is produced through consumption, compare this with all these countries, you can see that China is having a relatively smaller percentage of consumption. And China has a lot with international trade, and we've got a very large percentage with investment as well. So that's China's job to transfer the economy from an investment and trading-based toward a consumption-based in the next decade. And consumption will be the key for China's economic growth. And if you look at consumption's performance in recent years, you can see that its growth rate has been really positive, even amid the property slowing down. Because when we look at consumption, you can actually separate the consumption into 2 categories. One category is associated with the property market. For example, the purchasing of air conditioner. Usually you don't buy a new air conditioner if you don't buy a new house. You get an air conditioner, use it for like 10 or 15 years. The latest air conditioner that I just replaced has been used for 13 years. So you don't really buy a new air conditioner if you don't buy a new home. So all these consumptions, for example, air conditioner, furniture, TV sets, carpets, these kind of things has been slowing down because of the slowing down of the property market. But if you exclude these items from the total consumption of China, you can see the rest of consumption are really growing at a very fast number in the past few years. And when we talk about the property market, it's not going to be staying at the bottom forever. Chinese people still need new homes. So this is a temporary thing. And when the property slowing down is over, then when we see the consumption relating with the property is coming back, you will see the total amount of China's consumption growing at a very fast speed in the future.
And so, China also says it will cultivate new consumption models and support the outlay and childcare industries. So how will all this help China's economic growth in the long run?
Right. So I think, these measures are very important as we talked about how the internal demand, especially consumption demand, can be further bolstered. And so what kinds of demand, I think that is very important. As Jiahe just mentioned, a lot of the housing appliances and house-related consumer goods may not be very, in high demand because of the housing market stagnation in the past few years. But it has been shown that increasingly Chinese people love to spend on experiences, including travel, tourism, for example. It has been estimated that 2 billion trips will be made in this Golden Week holiday, and that it's 19% higher than the pre-pandemic 2019, and that is still 5 or 6% higher than last year's Golden Week travel. And more excitingly, I think it's also estimated that the travelers are going to spend nearly 6% more than what they did during the last year's Golden Week, according to Fleagy. So what that indicates is that, again, even though people are sort of concerned about their housing values in the past, and also the stock market has been, bearish for the past 3 years. People are still having the confidence and also the income to spend on travel experiences, entertainment, education, and many other, health-related expenses, and so health services related expenses, and so on and so forth. And as China, is undergoing population aging and also demographic changes, I think it's all the more important to not only find a new places where consumption would grow, which is what you just mentioned, elderly care, child care, also education, training, and so on and so forth. But also it's important to provide the kind of consumption services that people would enjoy. And so I think that it's really important because that would help people to have more incentives to have childbearing, also raise families, and also have better experiences for their retirements. And so I think the super economy it's a great opportunity for the demand and also for the service sector to grow. So these are not just challenges for the Chinese economy, but they are also really important opportunities for the kind of structural transformation in China. So I think this is really, one stone hits two birds, right? On the one hand, you cultivate the consumption in the areas that have the great potential to grow. And on the other hand, providing, quality services in these kinds of areas would really help to, provide more impetus for the economy to grow going forward by supporting, childcare, childbearing, and also by supporting the elderly generation.
Well, we're speaking with Yan Liang, Professor of Economics, Willamette University, and also Chen Jiahe, Chief Investment Officer at Novum Archi Technologies. And after a short break, we'll discuss the future of European competitiveness. Stay with us. You're listening to Biz Today. I'm Zhao Yang in Beijing. The European Union has fallen behind its economic peers, and the gap will widen without urgent action. This is according to former European Central Bank or ECB Chief Mario Draghi in a report titled The Future of European Competitiveness. The report explores the roots of Europe's productivity problems and highlights key sectors where the EU lags behind its global competitors. The findings, which cover innovation, venture capital, and industrial production, paint a concerning picture for European policymakers. So, Yan, first of all, what are your main takeaways from Mario Draghi's The Future of European Competitiveness report?
Right. So I think Draghi actually really hit the nail on the head. He basically argued that European Union is facing huge economic challenges that will soon make the bloc irrelevant on the global economic scene. And I think you rightly pointed out some of the important challenges, such as you just mentioned, the productivity growth that has been quite stagnant. When we look at the numbers, the European Union productivity growth has been just a modest 0.7% per year on average since 2015. And that's about, I would say, actually less than half of the US's growth rate of their productivity. And it's also just a meager of 1/9 of China's productivity growth since 2015. So this is clearly not conducive for their economic growth and also their structural upgrading. So there are many reasons for why the productivity has been so slow in growth. One thing has to do with the population aging and the demographic changes. And that's going to continue on. As a matter of fact, the EU workforce could shrink by around 2 million workers per year by 2040. So they're not going to be able to, get more labor force on that front. So they have to strengthen their productivity. Not to mention, now that, they also lose the cheap access to Russian oil and gas, that's going to take away their cheap energy. And so that would all the more make it difficult for the economy to grow. And last, I think the really glaring, I would say, insufficiency in the European economy is the lack of public investment. Just by looking at the R&D spending, for example, the United States has spent $886 billion, or about 3.4% of the GDP in 2022. And Europe EU as a whole, they spent only 382 billion, which is about 2.3% of their GDP. So the lacking of the kinds of investments in R&D, especially coming from public sector, as well as the lack of private funding, I think it's really going to drag on their productivity growth going forward. So I think Darchi has mentioned things to really solve these problems, including massive increase in investments. He talked about the numbers about 750 to 800 billion dollars a year, as well as some of the very important institutional reforms within the EU. So I think this report is timely, and it's definitely a wake-up call for the European Union.
So, Jiahe, what are the key sectors where the EU lags behind as a global competitor? And why do you think the EU is lacking R&D funding?
Well, currently, when we compare the sectors, Europe has its traditional advantage with things like, many of the consumption items, the machinery that is produced by countries like Germany, and these kind of traditional sectors. But what the EU is lacking behind, especially behind the United States and China, is a sector with a high-tech stuff, especially like digital world, AI, all these kind of things. And the reason behind that is complicated. One of the most important reasons is that Europe is lacking innovation. Europe is a traditional society separated into tens of different, over 10 different markets. And people are not that unified. It doesn't have a unified market as China is having, 1.4 billion people altogether, or United States is having. If you combine the US market and the Canadian market, that's a pretty large united market. That's one single market. But Europe doesn't have that. Europe is separate into, different small economies. They don't even use the same language together. For example, you have English, you have French, you have Italian, you have Germany. You have all these kind of different language, Spanish. So it's very difficult for the digital industry to be prevailing in such a very separated market. I mean, that's the same thing. If you look at the southeastern economies, Southeastern Asian countries, you have Thailand, you have Malaysia, you have Singapore. It's not very well growing with the high-tech stuff, especially the digital economy. So that's the thing. I mean, you have a separated European Union into 10 different small economies. It's really difficult for you to grow the digital world, the digital businesses, things like these. But anyway, when Europe is looking at the success that has been achieved by America and China, they also want to do this. I mean, they have all the talents that they need. They have very good educated engineers. They have a lot of people got degrees from universities. It's only that market is not that fitting for the growing of the digital world. So they have to do a lot of things toward it, and that include the encouragement of the investment by the government, the setting out of favorable policies for these businesses, etc.
So the EU technology innovation, some say Draghi is right that the EU's regulatory first approach is holding Europe back. So what do you think?
Well, I don't think that's necessarily a disadvantage. I think if they can make the policies transparent and also provide, sort of forward guidance for businesses that reduces regulatory uncertainty, I think in some ways that will be helpful. But I don't think, in a way, there are also problems, right, with regulations, especially when it comes to the implementation. The reason I think why EU is lagging in technology has at least 4 different reasons. One of them has to do with, the public investment is very lagging in upgrading the digital infrastructure and also to provide the education investments. And then second, there are a lot of, like I've mentioned, some of the bureaucratic red tapes that are not conducive to businesses, to establish. When we look at, for example, the unicorn companies that has been established in EU since 2008, there are about 147 of them. Since then, about 1/3 of them eventually relocated abroad, mostly to the United States. So I think just the business environment is not as conducive to encourage some of these mostly innovative and most tech-intensive startups. Then I think the policy and regulations, and I think Jiahe mentioned this, in different EU countries, they are not necessarily very well coordinated, As a matter of fact, we started to see some of the countries, they're implementing certain industrial policies, provide subsidies to compete head-to-head with some other European economies. And so I think that it's also one thing that Darcy mentioned in his report, that the European Union needs to get their act together at their union level, not just individual countries competing and have these very uncoordinated policies. And then finally, I think the important part is just the competition from the United States. The industrial policies that they have implemented have attracted a lot of European businesses to go to the United States and invest there. And of course, China's manufacturing prowess is also a very significant challenge for EU to continue to attract overseas investments and also funding. One of the things we're seeing now, for example, is more than 80% of the global AI funding goes to either the US or China, compared to just about 7% to the EU businesses. And same with quantum computing. The top global firms, they're 7 of them are US based, 2 of them are Chinese, and none is in Europe. So I think with all these challenges, mostly coming from funding, but also the policy visa coordination, I think that is the main reason why EU is lagging behind. So again, Darcy is calling for more public investment, but immediately, after the report was released, the German finance minister already said, we're not interested in issuing common bonds. And so that just seems that the challenge is going to be really serious, and it's not likely they're going to have a very quick solution out of their current conundrum.
Thank you very much. And that was Yan Liang, Professor of Economics, Willamette University, and also Chen Jiahe, Chief Investment Officer at Novum Aki Technologies. And that's all the time we have for this edition of Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.